It appears as though our breakout has begun and price action did what we said by a margin of about 85%. It is time to go over this very complex breakout to understand how the entire upside move is unfolding. Strap in and buckle up because tomorrow may yet again be another interesting day. Welcome back to the channel on this happy Monday. This is ARCa and let's dive into ticker symbol NVOS. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol NVOS, our winner for the day, right? And please go ahead and take a look at the price action today as the first breakout target was met almost to the T, right? So we have here a top side from today's price action, Monday, December 18th, coming in at a high of 131. And noticing on the OHLC up here, the open, high, and low close, right? Hovering over that candle gives you that 131H for high. And the target that we had here as first one to reach was, guess what? 131, right? So we ended up getting that 131, the pullback that we were also looking for. We were thinking that we were going to get a pullback at around 126, 127, right? But that pullback came down to our secondary support. And to tell you the truth, it's understandable, right? So as soon as we break out of one of these formations here, the typical thing for price action to do is usually to retrace back and test that conversion of resistance into a support before a continuation onto the upside. So I'm just going to say it clear here, team. I'm not going to be surprised if price action actually gets a quick little downturn here, even into the 116, the $113 level, in order for us to get a continuation to the upside, of which then it could start. We could then start seeing the 139 to about 145, and then even our 159 to about 162 targets based on this formation. But this is the first formation that I noticed here that we would potentially be using for breakout targets, right? But it is a little more complex than this because there are several types of bulls trading this asset. Okay, so let's go ahead and take into consideration a shorter time frame falling wedge, right? So I want to go ahead and point this out right now, right? Because just in case you're new to the channel and you haven't been following and you don't know the thesis just yet. So we'll go ahead and dive into the statistics as well, right, for the historical volatility versus stochastic momentum backtest for the upside targets, right, so which are incredible. I can't wait for you to see it. So definitely stick around and let me know that you are still there when you get to the statistics side, right? So check this out. All right, so this is a falling wedge here, team. We definitely got that breakout that we were looking for, right? The first target that we were observing here as a potential top side was actually based on the smaller target of 127. Okay, price action came up to the 131, which we actually had the 0618 sitting at 132 as an area of resistance. Not only that, is that we also had the second bullish formation that we had here. So this is where the complexity starts, okay? This is the second bullish formation, and this is called a descending broadening wedge. Okay, so this is starting from right about here, right? Don't mind this area here, please. Okay, so just starting right about here, the formation goes all the way down here, right? And then it starts from this point. Starts from this point here. So if I'm just going to outline the supports and resistances for you, it looks like this. Okay, I just had to have it. I had to have it highlighted like that in order for you to understand what I'm looking for, right? So in other words, it would be like this. Okay, this is the broadening wedge. All right, so we're just going to leave it with those lights on there so that you know that this is the second bullish formation. Okay, so this is now turning into a buy formation breakout, a bullish buy formation breakout. Okay, so we noticed yesterday that the top side resistance that we would face would not only be the 0618 at 132, but also the top side of our wedge, right? So you got that wedge top side right there. And then we ended up getting that pullback. So now, please notice here that we actually haven't pulled back to validate the support conversion of the falling wedge, right? So we broke out of the resistance. Now we converted that support into that resistance into support, and we still haven't gotten that just yet. We don't have to officially, right? But it's always good to consider that possibility. Okay, now what other targets are we looking at here? Well, let's continue on this because there is still more to go, right? So this is a channel that we are now testing the top side of. Okay, so let's go ahead and point that out right now, and so that you can see exactly what I mean, right? There we go. So this is that top side that we're testing as a potential support now, because we just got that official breakout from the channel, and now we're getting the resistance, and we're coming back down to test its support, right? It's right here, the blue line, right? So this is now a tri-formation breakout, a bullish tri-formation, okay? So this is already giving us that we're breaking out of a different type of strategy by a different type of bull, all right? So now all of these formations have different targets too, okay? For example, this target here, we are able to acquire that target by taking a trend line from the top side of the formation to the very bottom side of the formation, and we apply it to the breakout zone, okay? So this is around the area where we said we would break out, right around here. So we're still okay, right? And we kind of did right there, right? So we put that line there, and I'm sorry. This would be the candle here, but honestly, we would really need a candle here with no exposure to the inside of the formation. So we're still kind of guessing-ish at this point, right? So as soon as we can get a candle break, then we would be able to consider this. But we still have leeway here. We have some wiggle room in order for us to consider 2 more or 3 more candles of 6-hour variation here, variety. Okay, so this target would be taking us to the 161 level. Okay, now to add more to this thesis, let's go ahead and display to you another formation. Okay, yet again, another silly formation. All right, so now this is yet again another formation, and this is the inverse head and shoulders. Okay, now notice how the inverse head and shoulders has a secondary shoulder here and a secondary shoulder here. So a double shoulder, inverse head and shoulders. It doesn't give it any more validity. It doesn't give it any more strength. It just is what it is. And the formation is already showing some validity. Okay, so it's already kind of breaking out. Now, the target to observe for this formation would be taking a trend line from the top of the formation, right here, the neckline, to the head, and then you apply it yet again to the top side of the rightmost shoulder. Okay, so at this point here, we're getting a target that's located right at about 167. That's rhyming very nicely with the 1.272 at 169, right? And now finally, the target from the descending broadening wedge, this here has its own take profit target, and it's located right up here at 172. And this is how we've come up with this range here. This is the range of 161 to 172 with a focus of 169 at the 1.272 geometric level, right? The Fibonacci retracement, figure here. Okay, so that is currently what I'm observing here, and it appears as though we're getting ready for a bigger and bigger breakout, right? So you might ask me, what is this target here, though, ARCa? You never said nothing about that. Well, that's actually the target from the back of the triangle, right? So the triangle here, from the top side of the triangle all the way to the bottom side, you apply it to the area of breakout, and that gives you another target to observe. So in this case, the reason why I have this target here is which is confluent to the tweezer tops right over here from December 5th and December 6th of this year. We have that there because this would be the potential pullback area, right? So I'm just going to go ahead and draw you an area that I think we could use for a potential pullback. So why a pullback though? Well, that's because we would make the price action here rally to this upside. We closed at 121, right? We'll rally to the upside here, resist from this level, and then guess what? Start validating the breakout from the descending broadening wedge, right? So we'll get that breakout, come back down and start validating the descending broadening wedge, and then move onwards and upwards. We are sitting right now at 121, which is within the golden pocket, which is not the 618 and the 382, right? We're within this golden pocket. That's very bullish. I know that we can still face a downside here, but if we do get a downside, it would be just to validate the conversion of resistance into support before a continuation to the upside. But if we do come back up and meet this target of 139 to 142, the retracement here would be to come back and start validating the conversion of resistance into support of the descending broadening wedge, the yellow one, right? So then when we come back down here, look at where the price action would be. We would be yet again right within that 126 to 120 zone in the golden pocket. This is a very bullish area to be in. This area here could serve as a spring for us to continue onwards and upwards to eventually fill the targets of about 161 to 172, remember, with a focus of 169 at the 1.272. All right, so So just know that yes, it is a very complex breakout, but it's because I'm able to identify every type of bull that's trading this statistically, psychologically, geometrically, and psychologically. Okay, so if you want to learn more of this, I am not going to teach my course anymore. The ArcMasters course at gmail.com is where you want to reach out to me, as I will be starting a 16-week mentorship in January, and I will not continue this any further, team. I've already done the third track of students. I opened up 30 seats. I could fill 36 in there, right? So the third track of students, they're on week number 5 right now. They just completed week 5. They're going to week 6. And the track 4 students, which could be you, would be starting at the beginning of January for a fresh new start to a new year. Okay, so get your seats now, because now I only have about 14 seats or 13 seats available on this as it's continuing to fill up now. Okay, team. So yeah, definitely get enrolled. I'll pass or get an email here, and I'll send you over the disclaimer, the syllabus, and all that good stuff. And then we'll claim your seat. Okay, team. So next chart. Let's go ahead and move on. All right. So this is the statistical side of the analysis, and this is using historical volatility represented in a linear scale using the indicator BBWP created by the caretaker. Right, so now it says ARC BBWP because I've modified it just a little bit by adding these trend lines, right? The critical contraction zone and critical expansion. Volatility is completely direction neutral, so we use the stochastic momentum indicator to determine what direction the asset can be in on a contraction phase or an expansion phase, right? So in this case, I have backtested anytime that volatility has expanded and then contracted paired with an upside of stochastic momentum, right? So there are several iterations here throughout the 3-day time frame. Its entire trading history. These are all the samples right here, right? So this gave us this samples. The samples gave us this data set right over here, right? So 24 total iterations, of which 18 were guessed correctly to the upside, giving us an upside accuracy of 75%. With an average upside thrust of 175.54% over the span of about 26.17 days. Okay, now I have also calculated from the mean the standard deviation of 190.56%, landing at 68% of the results. And I've also, from there, calculated the upper and lower bounds of the first, second, and third standard deviations. The first standard deviation landing at 366.10%. The upper bound of the second standard deviation at 556.66. And finally the third, right, at 747.22%. I have the targets listed here. The mean, the average here is actually just taking the asset up to about $3.42. The standard deviation of 190.56% is taking the asset to $3.59. The upper bound of the first is 574. The upper bound of the second would be 810. And finally, the upper bound of the third would be 1044, statistically speaking. Please remember that these are statistics. They are not certainties. They are certainly there for for us to evaluate and determine what the higher probability targets would be on the way up. Okay, so this marks off the performers there all the way up to the upper bound of the third standard deviation. Right, so this is, that is the back test there. Okay, team, and guess what? The signal fired on Thursday at the end of the session at the beginning of Friday. Okay, so we are trading this as a fresh, brand new signal with an upside pivot on stochastics and official contraction starting here from volatility. So this is definitely ready to go. The signal has fired off, and now we are in the bounds here of creating an upside move, of which we're already kind of tinkering with starting today. Very curious, right? After we put that analysis out. Okay, team. So in this case here, looks like price action, just like I said, right? We would be, so this bearish engulfing candle formation here, right? Huge red candle over the green one, completely ignored by price action here. But while ignoring it, we also created another bearish engulfing with the red candle completely engulfing the prior green one. And it looks like price action is yet again ignoring it, right? So we were expressing the possibilities or the potentials of that happening based on a prior iteration, right? So back to back. So now let's go over to the last chart here and see what's going on, right? So yeah, we definitely have some immediate short-term downside, specifically from the 5-minute to about the 30-minute time frame. And that actually bleeds into the bi-hourly, and then we can see where the support may actually land on the 4-hour time frame using the SMA 14 built into the RSI. And this, the teal line is actually the RSI signal representing price. Okay, so that would be downside into the second hour, using a little bit of a head and shoulders there as well. Momentum, you can use that, so definitely know that, right? Here's another head and shoulders right here, downside, right? So yes, the signal represents price here, and the signal would continue to the downside here, cascading into the 4-hour, where then we have the SMA 14 right here as support, sitting conveniently at the gravitational zone of the bear weakness percentile of the RSI, right? So the inner workings are the weakness percentile. The outer workings are this would be bull strength percentile and bear strength percentile. Okay, so overall, the upper half is the bullish control zone. Bottom half is the bearish control zone. Okay, team. And now in between, of course, just please go ahead and check out the RSI video that I just put up. I shouldn't have to explain this. You can just watch my new video. Thank goodness. That's why I did it. Literally did it for this reason alone. All right, so I'm going to try to tag it in here somewhere. All right, so now that I know it's around 15 minutes, or it's around 38 minutes into the video right now, right? So apologies about that, team. Let's go ahead and continue and finish this off quickly so that we can get to our resting. All right, so yeah, this would actually encourage here a bounce to the upside, and it would in the 12-hour time frame, because this would actually reject from the 4-hour time frame. So the 4-hour time frame gets that bounce to the upside, which is something that we're already kind of speculating on, right? So the potential of dropping either to the targets of about 118 to 116 with a chance of about 113. Same situation right down here, right? So that shows 116 to 118 with a downside of about 113. Same support levels that we're looking at here from the two different time frame wedges. Right, so this would be the area that we could find some type of support before a continuation to the upside. Now, if I were to just add quickly here some moving averages, then we'd be able to understand exactly why, right? So 6-hour time frame definitely has some moving averages down there. Let's see this one real quick to see if we have anything there. Well, yeah, 118 to 116, right? So we have the SMA 10 located at about 118. So we'll see about, we'll see how price action tends to behave there. And there is one more thing I guess we can do, right? So let's just go ahead and kind of bring up the master layout here so that we can see what the LRC is doing in the hourly time frame, right? So we'll just get one more little thing out of the way, and we'll be good to go. All right, so this would be that chart. Sorry about all the drawings here, but we can hide them, right? And I want to see the LRC. So let's go ahead and just pull that up. So it's going to be right in here. ARCa Bull's LRC, the linear regression channel on an hourly time frame. Let's see. Okay, yeah, it's actually, it's actually showing us a potential downside. And guess where the downside could be, right? So this is us, the hourly time frame closing beneath the EMA 21 and the SMA 200, the EMA 9, the EMA 7, and the SMA 10. But the most critical support that we have down here would be, or the most credible one, would be the hourly time frame SMA 50, located where? 119, right? So this is literally the support that we're looking at here. And then if we come back to our price action, it's showing that we have a support right here from our discretionary measures of 118, and we're already looking at the SMA 10 at 118 too. Okay, so lots of rhyming there, but just know, I know I'm favoring here 118, 119, but just be aware that we can certainly drop to 113 and then continue on to the upside. Okay, team, so that's really all that I have to say. Please remember to request your seat and reserve it for the ARC Masters trading course, and everything will be cool. All right, team, so yeah, I think this is a pretty good place to cut it out here. Do I want to say anything else? No, that's it. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios, team. Yeah.